Hello students, today we are going to solve some numericals of depreciation class 11th accountancy. In the previous video, I have already told you about the concept of depreciation and we have discussed about the two methods of depreciation. Now, in this video, we are going to solve numerical which is based on straight line method. So let's start. The first question from your book is, on 1st April 2007, a limited company purchased a machine for 1,90,000 and spent 10,000 on its installation. Please mark this. This installation is very important. At the date of purchase, it was estimated that the scrap value of machine would be 50,000 at the end of 6th year. Okay, so at the 6th year, it is very important. Give a machinery account and depreciation account. Now, depreciation account is not to be prepared in the book of company for 4 years after providing depreciation by fixed installment method, that is straight line method. The book is closed on 31st March every year, as you know, the accounting period. So, remember that whenever you purchased a machinery and spent some amount for installation or for carriage, it will be the part of the machinery. So, the value of machinery will be 1,90,000 and add the installation charge, that is 10,000. So the value of machinery will be 2 lakh. Okay, so whatever depreciation will be charged on 2 lakh, right? Remember that. Now, first of all, we have to find out the amount of depreciation to be charged on machinery. So calculating this, we have to use a formula, that is annual depreciation is equal to cost of asset less scrap value divided by estimated useful life of asset. Okay, so the cost of asset is, as I told you, 2 lakh and scrap value. So I have told you that the scrap value of machinery will be 50,000 as given in question and useful life is 6th year. Okay, so 2 lakh will be written as a cost of asset, scrap value 50,000 and the estimated life is 6 year. What is estimated useful life of asset is that what you deem to be use the machinery in the future, how much year you expect that you use your machinery effectively. So it will be estimated useful life of asset. So the amount of depreciation will be 25,000. How? 2 lakh less 50,000 divided by 6 year. Okay, so this will be the annual depreciation. So every year at the starting of accounting period, you have to charge 25,000 from the machinery. But sometimes you need to calculate the rate of depreciation. So the rate of depreciation will be calculated from this formula. Amount of depreciation, that is 25,000, divided by total cost of asset, that is 2 lakh, into 100 because we have to find percentage. So percentage will be 12.5% annually. Now we will prepare the machinery account. Okay, so first of all, we purchased machinery on 2007 1st April. So that will be written as a bank because we had paid from the bank 2 lakh, and on next year 2008, after completing accounting year March 31st, depreciation account will be open 25 because we have to charge 25,000 as an annual depreciation as we calculate here, and remaining balance will be find out. How it is calculated? From 2 lakh we have to less 25,000. So 2 lakh 1 minute 2 lakh less 25,000. So and remaining. So 1,75,000 will be balance CD. Balance carried down. Okay. Now this balance will be transferred to next accounting period as 1,75,000. So in straight line method, the amount of depreciation remain constant every year. So only 25,000 every year you have to charge. In next year, when you less 25,000 from 1,75,000, you got 150 and it will be transferred to next year. At the end, simply you have to place depreciation and close the balance. As in question, you have to check for how much year you have to prepare machinery account. Here it is mentioned for 4 years. So for 4 years you have to prepare depreciation and less from the value of machinery, and here your machinery account will be closed. Now we will solve another question. As from the following transaction of concern here is a company or any business, prepare a machinery account for the year ending 31st March 2013. It is very important to note for which year we have to prepare machinery account. So on 1st April, a second hand machinery for 40,000 is purchased and 10,000 is spent on prepare for making serviceable. So it is second hand machinery and you have to spend 10,000 on it at the time of purchase. So the value of machinery will be, yes, the value of machinery will be 50,000, as you had to pay some amount to make machinery serviceable. Okay. Now, so you had to place this on 1st April 2012 as here mentioned. Bank account 50,000, and now we had to read some more transactions because on 1st April you purchase only one machinery and in 2012 you purchase another machinery 2 times. Like on 30th September purchase additional new machinery for 20,000. Okay. So this machinery is purchased for 20,000. So another machinery will be purchased on 30th September as 20,000. So if you purchase machinery on 30th September, okay, 30th September, for how much you have to charge depreciation? For how much you have to charge depreciation? Remember that if you purchase a machinery on 1st April, right, at the starting of accounting period, you charge machinery depreciation for 12 months. But when you purchase in the mid-sem of accounting period, you had to charge depreciation only for the month remaining. Okay, the month remaining. Remember that. It is very important. So, in the question, here it is written, the machinery is purchased on 30th September. So, how much time it take to be run in the same year? So, from 30th September 30th September to 31st March, there is only 6 months. Okay, so machinery will be charged for only 6 months. So, how you calculate depreciation? It is simple. Just write the amount of new machinery, that is 20,000, and the rate of depreciation 10% per annum. So, the 20,000, the value of machinery, into the rate of depreciation into how much machinery run in the month, in the year, that is 6 months, upon the total month in a year, that is 12 months. Okay, solve this. 6 1 is 6, 6 2 is 12. Okay, and it is just simple. You had to remember that it is quite easy to calculate depreciation divided by 2. Okay, only 1,000 you had to charge for this year only. In next year, you had to charge full amount, that is 2,000. Okay, so here we will be charged for first year, that is 5,000. How it is calculated? 10% of 50,000, because this machinery run for full year. Okay, 5,000, and for second machinery only 1,000 will be charged, that is total depreciation will be 6,000. So the balance of first machinery is 45,000, as 50,000 less 5,000, and in next machinery only 19,000 left, because for this year we had to charge only 1,000. So the total balance BD will be 64,000. How it is calculated? 19,000 added with 45,000, you got 64,000. So this is the method of calculating depreciation from straight line method. In next video we will understand how to calculate the depreciation in diminishing balance method.